Good morning, good afternoon, and good evening to those of you joining us today here for the IMF's African Department's Speaker Series. This is an occasional series of seminars and events that we've been having internally at the IMF's African Department for several years now. And today, for the first time, we're opening it up. It's a series where we invite policymakers, academics, analysts that work on Africa, on policy, macroeconomic policy issues for the main part, to discuss policy challenges, policy outlook for the region, and how best African countries can advance economic development. The focus of today's discussion, I'm very happy to say, is on digital payments and crypto assets, which have raised quite a bit of interest in Africa. Our countries are looking for faster, simpler, cheaper, and safer financial payment system. And some of our member countries, the IMF's member countries, are at the forefront of these innovations. For example, Africa's first central bank digital currency in Nigeria, the e-Naira, has been widely acclaimed. As well, of course, for many years now, M-Pesa in Kenya has been one of the most inclusive and widely used payment systems. We're very pleased, as such, to have today with us a panel of distinguished policymakers, Dr. Patrick Njoroge, Governor of the Central Bank of Kenya, and Dr. Kingsley Obiora, Deputy Governor of the Central Bank of Nigeria. They will share with us their respective experiences and practical challenges that they've faced in introducing or planning to introduce central bank digital currencies, and of course, the private digital payment system that's been in place in Kenya for some years now. My name, again, is Ababa Selassie, and I'm very happy to be moderating this session. Let me just say a little bit about our distinguished panelists. Dr. Patrick Njoroge is Governor of the Central Bank of Kenya. He joined the CBK after a 20-year career here at the IMF, where he held several very senior positions, including as advisor to the IMF's Deputy Managing Director, Deputy Division Chief in the IMF's Finance Department, and as Mission Chief to the Commonwealth of Dominica, and has held many other very senior positions. Before joining the IMF, Dr. Njoroge was an economist at the Ministry of Finance and a planning officer at the Ministry of Planning. He holds a PhD in economics from Yale University and a Master of Arts in economics from the University of Nairobi. Beyond being governor of the Central Bank of Kenya, Dr. Njoroge also is spearheading work towards the introduction of CBK digital shilling, and is part of the UN's task force on digital financing appointed by Secretary General Antonio Guterres in November 2018. Dr. Kingsley Obiora is Deputy Governor of the Central Bank of Nigeria, in charge of economic policy and he's been doing this role since 2020. He has served as alternate executive director of the Africa Group 1 constituency of the IMF here in DC. He has also held other assignments at the fund in a previous life, where he contributed extensively to the fund's work on exchange rate assessments, debt sustainability analysis, decoupling and spillovers, as well as reviews of financial sector assessments. Between October 2011 and July 2018, Dr. Obiora took leave from the IMF to work with the Nigerian government, first as special assistant to the president's chief economic advisor and technical advisor to the National Economic Management Team for 2.5 years, and second as special advisor on economic matters to the governor of the Central Bank of Nigeria for 4 years. He holds master's and doctorate degrees in economics from the University of Ibadan. Kingsley, Patrick, thank you so much for joining us today. Look forward to a very robust discussion. Without further ado, maybe I'll start with you, Kingsley. If you could tell us a little bit about why the Central Bank of Nigeria chose to introduce the e-Naira last year, what you saw as the potential benefits of this move, and what challenges and benefits you've seen since its introduction.
Thank you very much, Abe, and good afternoon to Patrick. Good to see you again, to all my former colleagues, and to everyone watching around the world. It's a real pleasure to be invited to speak here today. I think, first of all, I would like to put CBDCs, or central bank digital currencies, in context. I think there have been three distinct trends that seem to have led to the birth or, concrete thing about CBDCs. The first, as we may all know, is that the use of physical cash in conducting business and making payments has been on the decline for a long time now. And this has been all around the world. According to a global pay, payment by mobile wallets exceeded payments by cash for the first time globally last year. And in fact, the projection is that cash will only account for about 13% of in-store payments worldwide by 2024. And this trend has differed across countries. So, for example, a survey by Global Web Index found that 77% of South Koreans prefer now to make cashless payments, but that's compared to only about 33% of Filipinos. And here in Nigeria, we have also seen some steady decline in our printing of banknotes over the last couple of years. So that's one trend that we've seen globally. Another trend alongside this cashless revolution has been an explosion in the adoption of electronic and digital payments across the world. According to a UK-based consulting firm, the number of digital transactions around the world has soared from about 393 billion in 2014 to nearly 710 billion by 2019. And then alongside these, shifts that we've seen has been an absence of swift and effective solution by central banks, leading some to the creation of, non-government entities actually, to the creation of private currencies. So it is on the basis of this that many central banks, not just the Central Bank of Nigeria, started thinking about CBDCs. I'm sure we all know of the 2021 BIS survey of central banks that found that 86% of central banks are now actively researching the potential for CBDCs, while 60% are experimenting with the technology, and 14% were already deploying pilot projects. Given all of this, the Central Bank of Nigeria commenced extensive work, consultations, and identification of use cases and testing of a CBDC, first in a sandbox environment as far back as 2017. The objective was to establish that there was a compelling case for CBDCs in Nigeria. And I think once we completed this preliminary work, it became clear that a CBDC would have significant benefits for Nigeria. And this included, rapid financial inclusion, reducing the cost of processing cash, enabling direct welfare payments to citizens, reducing the informal economy, improving tax collection, boosting cross-border trade and remittances, reducing the cost and improving the efficiency of payments, and just engendering economic growth in general. All of this I may come back to, flesh up later. But I think that once we define these internal benefits, we continue to work by assembling the right mix of our staff from all across the bank, and then by producing a design document, which we sent out even to the fund and to the BIS for review. Now, what this design document did was to lay out the architecture of the currency, its functionality, what roles each actor will play in it, the risks, and then how the risks will be mitigated, so as to give Nigerians the comfort that the e-Naira is well conceived and planned. And we set out to launch it October 25, 2021. I think the key risk that one has to look out for in introducing a CBDC is five mainly: banking sector disintermediation. And of course, again, these are things that we can flesh up in the question and answer session. There is operational risk of knowing that there is non-stop service, cybersecurity risk, internet disruptions, and financial literacy. Overall, I think we've done very well. There is a PwC report showing that Nigeria is now #1 in terms of adoption, but we're managing to keep going and improving on the system. I'll stop there for now.
Thank you so much, Kingsley. Very nicely laid out why you moved in this direction. Patrick, if I could now turn to you. Of course, Kenya has had a very robust private digital payment system in the form of M-Pesa, which many other countries in the region and beyond envy. And yet you're still thinking about introducing a CBDC. If you could say a little bit about the thinking behind this. I framed the question this way, of course, because Kingsley has highlighted, I think, that one of the things that attracts policymakers about the introduction of CBDCs is this move away from cash and hopefully moving in the direction of more inclusivity in terms of the use of digital currencies as a means of payment. So if you could weigh in a little bit on this, please.
Thank you very much, Abe, and good afternoon, good morning, and glad to be here. Thanks for the invite. And again, thank you, Deputy Governor, for your very incisive introduction comments. In terms of where we are in Kenya, Kenya did start this whole revolution with its platform M-Pesa, and I mean, we also tell ourselves that we are the cradle of Fintech, precisely because that's where it all started, improving the payment system or the payment process, etc. And this is 15 years ago, and during that time, there has been significant benefits. The starting point was to solve a very simple problem, is the transmission of funds from those that are working in the urban areas to their families in the rural areas. And in the past, there was a very complicated sort of cash being given to somebody who gives it to somebody else, etc. But this was really the problem that they started resolving with the introduction of the M-Pesa platform. But fast forward, this has also led to significant improvements in financial inclusion. And it has tripled from 26.7 in 2006 to 83.7% last year in 2021. That, I think, is phenomenal in terms of the improvement that has been seen in financial inclusion. Now, obviously, once you have financial inclusion, improving at those sort of levels, there's a lot of other benefits that knock on to this. And I think even in terms of the livelihoods of people, the SDGs, for instance, but I think also other things, growth, etc. And there has been some work that has been done to identify or to assess the benefits of these sort of platforms in terms of the social benefits, etc. Of course, all this is underpinned by the transformation that these digital rails have built on, or these digital rails that are built on mobile money. Meaning, it didn't stop there. There has been now an ecosystem that has grown quite widely around these rails, these payments rails. And in that sense, you can afford to make transactions on your cell phone, on your phone, to somebody at any time of day or night. And then you have other benefits even in terms of banking. So banking now is no longer something that you can, or you're sort of chained or anchored in the brick and mortar sort of environment. You can do anytime, anywhere banking because of these rails that are there and the ecosystem that is built around it. So I think we feel that this has done. I mean, we've benefited a lot from this. A good example also of this is what happened during the COVID period. The transactions that were done, let's say, the benefits that were sent to the most vulnerable people, not a single one of them, meaning not a single shilling, that is our local currency here, was sent by cash. All of it was paid out through the digital rails. And I think there are significant benefits from that in terms of the being sure that it is going to the intended end user and other things about accountability, etc. And during this time as well, we have had significant increase in total transactions, banking sector as well, which has kept pace. I think there was a concern at the beginning that the fintechs will disrupt and overtake, and in a sense, they challenged, and the idea was they were going to overtake banks. Mm-hmm. And that didn't happen. Banks got very wise, and they themselves began to work the fintechs and innovated dramatically. So much so that now most of the innovations that we've seen over the last few years has actually come from the banking sector. And there's a document that was released a couple of weeks that shows that. But anyway, the point is that total transactions by banks has now moved from the regular sort of hand, over the counter sort of thing to digital channels. And it is increased from, let's say, 47.7% before the pandemic to 79%. And these are the number of transactions that are taking place on the digital platforms. And so more than 3/4 of the transactions are taking place on the digital platforms. That is amazing. So against this background, where do we go from here? From our perspective as a central bank, we know that our people are very innovative. And there are concerns that, and they should have questions about what more can we do? And is the CBDC, the digital central bank digital currency, can it help resolve some of the remaining problems? I want to insist that we approach things by looking at what problem are we resolving. So we are kind of agnostic about technology. So what problem are we resolving? And our perspective, maybe the bigger issues that will be resolved may not be financial inclusion, but it may be things like cost of transactions, or maybe, for that matter, cross-border transactions, etc. And so our perspective was, okay, let's see. Let's see if it fits the bill. And what we did is to go out and ask our population. We wrote a paper, and we asked them to comment on it. And we received a lot of comments. The comment period closed just on the 20th of May. And we are now analyzing this. But it was important to understand what the population, what their views are about the problems, what could be resolved, etc. Not just saying, yes, we agree or we don't agree. So our view here is that it may end up resolving some of the costs or some of the problems that we may have. A key one is that cross-border transactions. But then the issue is, what about the cost to the system? And this we need then to balance. So that's where we are. And not we don't have the answer yet, but I think it was important to involve everybody, and we thank those that have commented on it. And I think some of the questions that Kingsley raised are things that apply in Kenya, but I think the issue also is we are at different points. Mm-hmm. I think from our perspective, in terms of, let's say, financial inclusion, Nigeria is where we were, let's say, 10 years ago. I mean, you're at 50-something%. So one needs to understand the starting point of every institution, and there's no, of every jurisdiction, there's no one-size-fits-all with regard to using the CBDCs, or for that matter, the problem that should be addressed. I'll stop there.
Thank you.
Yeah.
Thank you, Patrick. Thank you so much. I think very, very nicely elucidated, and couldn't agree more that the response has to be specific to the particularities of country circumstances and the needs. So, following on that, if I may, Kingsley, what I'm hearing really is that in Kenya you already have a robust private digital payment system. And so the move towards a potential CBDC, if it happens, would be to try and complement that system, primarily not necessarily to expand financial inclusion. In the case of Nigeria, however, I'm hearing a little bit that, an important motivation is that you've not had as deep, as extensive private digital payment platform. That's first part of the question. And then the second one, and something I would welcome Patrick to comment on later also, is, there is still an issue of inclusion, no? Impressive as the penetration of mobile phones in our countries has been, including of smartphones, of course, really the uptake in telephony in our countries must be, for level of income, must be just one of the most impressive technological adoptions ever. But, impressive as this penetration has been, still quite a lot of our people that do not have access to mobile networks, mobile phones. So how do you address that issue if you go too much in the way of using digital payment systems, and that becomes the main means of transaction with amongst most commercial players? So a two-part question for you, Kingsley.
Okay, thank you very much, Abi. So first, I'd like to just agree with Patrick that Nigeria is not where Kenya is in terms of financial inclusion. But we've made serious progress, actually, in the last 7 or 8 years, because when the current governor resumed in 2014, one of the pillars of his vision was to significantly improve financial inclusion. And so at the time, we were actually at about 48% of our population within the financial system. And given several policies that he conceived and implemented, we're actually now at almost 70%. That still leaves us with about 30% of our population out of the financial system. And of course, we believe that the CBDC can help to reduce that number even more. And the question that Abe just asked is, yes, a lot of people might not, have smartphones and all of that. But that's essentially the next step of our improvement in the CBDC, is to introduce what we call the USSD code. So even for those that do not have smartphones, they can still, transact. And I'm sure, I believe M-Pesa would already have been there as we speak. Nigeria is actually building on one of the best payment system networks in the world as we speak. Even in digital payments, we've seen the value of our digital payments grow from $324 billion in 2008 to about $2.4 trillion, now. So Nigerians are already very used to digital payments. As you know, even within the continent, we have one of the largest Fintech companies, Flutterwave, and a lot more who Paystack on board every year. So proving on what we have, and a lot of the introduction to CBDC will really depend, as Patrick rightly said, on what problem you're trying to solve, and not a bandwagon effect, and on whether or not you have the initial conditions to even introduce it.
Thank you. Thank you, Kingsley. Patrick, if I could come back to you, what more remains to be done in terms of fostering financial inclusion? And even in Kenya, as you noted, it's, while, I think the extent of financial inclusion has been incredibly impressive, it's far from complete. And since you guys are at the frontier of this innovation, what more needs to be done in terms of fostering greater financial inclusion?
Thank you, Abi. First off is to make a point that every 2 years, we have been doing a survey of financial FinAccess survey every 2 years. And the latest one was in 2021. And that's the one that provided us the number I quoted on financial inclusion. But that survey also gives us quite detailed information about what else is there. One could argue that we are hitting diminishing returns. So, well, let's move on to something else. But that's not the case. Actually, we've discovered that there are two major impediments in this, and I use that word maybe loosely. The first is social norms, particularly for women, and particularly women who are in certain, I don't know, religious groupings or whatever, circles, where maybe the women are not, don't have, let's say, due to those social norms, they're not allowed to have a cell phone on their own, or for that matter, and it is registered in the name of the husband, or they're not allowed to have a wallet on their own, but rather it's registered in the name of the husband. And so that actually qualifies as being outside the system because you don't have an identity of your own. So social norms, I think, is a major one. And to ensure that people, again, as I say, women do get that, the technology that would allow them to be included. The other one, the other impediment relates to youth. You know, we have a very large and growing number of youth. So we have a very, let's say, fat pyramid, if you think of the distribution of our ages. So you have a lot of people that are going into the 18 and 19, becoming adults every year. But the trouble is, often they don't get the requisite identity cards, etc., that they need in order to register their own, let's say, phone, etc. So they remain with phones that are, let's say, registered in their parents' names. And so this ID issue is significant. And actually, we saw, we expected our financial inclusion numbers to be much higher than 83% that I quoted. But during COVID, it turns out that the youth were just at home and there was no pressure for them to go get their phone, get IDs, etc. So the number of IDs that were issued to youth during those 2 years was not that significant. Hence, our numbers were not as impressive as we thought they would be, at least at first blush. So we need to deal with those things, those specific, let's say, the root cause of the problem. I would also say, just to complete the thought, it is important, whatever we do, to make sure that we do not lead to exclusion, which is the point you are making of it. And it is extremely important for us to ensure that everybody remains in the system one way or the other. And one of my pet projects in terms of pushing it, not that we're involved in it, each time I talk to all these techies, is that we do need a $5 smartphone, which will ensure that we have, instead of getting people stuck with feature phones, it will ensure that people can remain in the financially, can remain included, but actually have a lot more services from the ecosystem that we have created.
Thank you, Patrick. Very interesting points. You know, one of the points that you made, Patrick, if I could come back to you before I go to Kingsley, is that an important motivation for thinking about CBDCs is the ability to facilitate cross-border payments. Now, this is an issue, a topic which is very hot topic, as it were. If I could ask you, two things related to this. First is that, of course, this requires other central banks Two already have adopted this, so it's not something that you can do by yourself. And then a second part question is, have you started these discussions with central banks either in the region or elsewhere? We know, of course, of the BIS initiative, the Project Dunbar, I think it's called, which includes 4 central banks, including South African Central Bank in our region, to try and see a little bit of the sandbox approach that Kingsley talked about, to try and see how this could evolve. But if you could tell us a little bit about any conversations you've had with fellow central banks, governors in the region or beyond, and more generally, how you see this.
Okay. Thank you. I think there are 2 levels, basically, that are important to acknowledge. First, we have been working for actually more than a couple of years. I think this is from 2017, cooperating very closely with central banks outside the region that are sort of ahead in this area of fintech. So I would talk about, for instance, the MAS, the Monetary Authority of Singapore, and we have been doing all sorts of things with them, including having a very popular sort of Afro-Asian FinTech festival, which we held, but I guess during the COVID period, it had to be done virtually. So we have been working quite closely with other central banks, and that is a particular element, including on the CBDCs. So it is not enough to have them already going with it. Meaning the other side, it is important to actually work together to create a sort of a common understanding and a common approach, and then a common testing of this. And that is something that we have been doing. And I think, for instance, I was involved in, or we were involved, and in last year, there was a hackathon precisely on these issues, on CBDCs, that was conducted by the MAS, the Monetary Authority of Singapore, and we were involved in it, including being judges at that hackathon. So I think the point here is we are not reinventing the wheel. We are working with others on this particular thing, to answer the question that you raised. Secondly, in the region, we in the East African region work very closely together. And we have our own discussions, particularly in the context of our meetings of governors. And we talk about the payment system, how can we improve it? And in a sense, even though we have 6 different jurisdictions, we want to move ahead, knowing that we want to have those transactions taking place at affordable rates, secure and quickly. So I think the point here is we have these circles that we're involved in, and all of them we have learned, and we have brought learn into it. At this moment, a lot of the other central banks in Africa are very interested in the outcomes of our, let's say, our asking the population to give us comments about our CBDCs. And we will be very open with it. We'll be public about it. But I think they too will benefit.
Patrick, that's one of the questions I have for later. What central bank elsewhere can learn? So I'll come back to you on that in a minute. Kingsley, if I could now turn to you. One of the points you mentioned about motivations for the e-Naira is to help reduce informality. Okay. I mean, I see this as a double-edged sword, because on the one hand, yes, it can help reduce informality. I mean, you'll have more visibility on the transactions that are taking place. But on the other hand, the reason why activity is already informal is, of course, the barriers to formality are higher, and I'm not sure how adopting this necessarily will lower those barriers. So if you could comment a little bit on that, please.
Yes, you're right. I think the way to see it is that a lot of people are not in the financial system, not really because they don't want to be, but the cost, the access is a bit high. So what we have tried to do with CBDC, and I really like what Patrick said about, making sure that you have $5 phones. There are these Chinese phones now that are really cheap, even though they are smartphones, they are way cheaper than, say, the high-end iPhones or Samsung phones. And so a lot of people are not in that space simply because they can't afford to be. You go to a bank to open an account, and I'm not saying that improvements haven't occurred, but before now, we found banks asking for a lot of documentation and things like that. In Nigeria, what we have done is that we have created what we call the biometric verification number, or bank verification number, sorry, BVN, which sort of gives you your financial identity. And once you have that number these days, it's very easy to go into a bank, and in 5-10 minutes, you're done with opening an account. We're doing the same thing with the CBDC. Once you put in your BVN, I think in 2-3 minutes, you will already be onboarded into the eNaira platform. You create a wallet, and so the barrier to entry is very low. And I think that is an attraction for people to join. And once we're also able to introduce the USSD codes, then you don't even need to have a smartphone. Even with a regular phone, you can still join very easily once you put in your BVN.
If I could follow up, Kingsley, I mean, this e-wallet that you have with the eNaira, where is there a limit as to how much money you need to have? You can have in this e-wallet, and why is that the case also? So that's the first question. The second part is have you given any thought to any implications, or what implications, if any, that the adoption of this eNaira will have to the conduct of monetary policy, the transmission mechanism, and the like?
Yes, the question you asked really just gets into one of the lessons or risk of CBDC, which is the fear of banking disintermediation. Because as you move deposits from the regular bank accounts into wallets, then that deposit is not available for banks to create loans or assets. So what we did in Nigeria to take care of that risk is to have limits, because a wallet is really not a savings account. It's really like your physical wallet, what you need for daily transactions or weekly transactions. So the wallet does not pay interest, say like the normal savings or deposit interest that is paid when you leave the money in your regular bank account. So what that means, though, is that we created a limit so that we avoid that disintermediation, depending on the tier of your bank customership. So depending on the identity and how much the bank knows you, we have tier 1 bank customers that only just have maybe a BVN or even their phone number. But as you go up the ladder, your limit that you can carry on your wallet increases. With respect to bank disintermediation, what we have done is to ensure that the wallets themselves are created from the banks. And this is very important, because in creating a CBDC, it's not like issuing currency for a central bank where you can do it all alone. This time, you will realize that you need the cooperation of several other agencies to even make it work and for acceptability. So the banking community is very important. Your tax people are important. If there is a Ministry of Digital Economy or IT, they are also very important. So you have to carry everybody along to ensure that once the currency is issued, the acceptability and workability is assured.
To follow up on this and put you on the spot a little bit, we've seen quite a number of countries beginning to think about possible use of crypto currencies, adopting cryptocurrencies as a means of payment. El Salvador, of course, and in our continent, CAR has also adopted such a law. Can you say a little bit about how you treat crypto assets, cryptocurrencies in Nigeria, and also what you think about this approach?
So in Nigeria, we first of all, I just think that the word cryptocurrency, the currency itself added to it, is a bit of a misnomer, because I don't think that as it is right now, that cryptocurrency will actually get the scalability they need to function as a currency, a unit of account, a mode of payment, a means of settling transactions. As we know, El Salvador does not have its own national currency, so the fact that it adopted Bitcoin is neither here nor there for me. What we have done in Nigeria is to say that these cryptocurrencies are issued by people, decentralized authority, or in fact, people we don't know completely. And what we have done is to say that we don't want them yet in our financial system, because the volatilities that they create can become a source of instability for the system. And as you can see, quite a few central banks have also taken this position. In terms of finality of settlements too, I think is a problem, because in a cryptocurrency world, every user has to agree before a transaction is settled. Mm-hmm. And that's not the way that transaction should work. You make payments, you collect your goods, and you think that you believe that that is completely settled. So I don't think that cryptocurrencies will get to the scalability and finality of settlements to become the dominant way that things are done in this part of the world.
Thank you, Kingsley. Patrick, if I could turn to you and ask the same question. I mean, what has been surprising is the adoption of this as a legal tender, and as I said, it's only 1 or 2 countries. But if you could say a little bit about Kenya's approach to crypto assets, cryptocurrencies, your thoughts on this.
Thank you. Thank you, Abi. I think I'll say the following. First, our principle has always been and will always be, what problem are you solving? Whatever you add into the ecosystem, that should be a question that is asked and answered before moving on. Unfortunately, a lot of these cryptos, and I'm looking back to all the discussions we had with the Bitcoiners several years ago, and I guess it was a fad then, and they were telling us about how they're going to improve the transactions, cross-border transactions, lower cost, etc. But I think there was a lot of hype, including also, throwing the word blockchain and the labels DLT, all those things. And those things didn't sit well with our sort of very principled approach, which is, what problem are you solving? And is this the efficient way to deal with it? Bitcoin, for instance, if they are talking about, or they talk about transactions then, but it takes it can only handle 7 transactions per second. 7 transactions per second. And so you think of being told, well, let's load this in our system. Most of the platforms that we have, and they do 2,000 plus transactions per second. And that is not their limit. Technically, you can go much further. It's true there are other new blockchain products, Solana and others, that are 700,000 transactions per second. But I think the point here is they too have their own problems. So I want to make it very clear here that let's begin with looking at the problem. What, in my view, has these products, let's just call them products. Okay, I'll call them crypto products. I think the big issue here is the risk, and I think Kingsley mentioned it, the risks that they bring to us. First, in terms of stability, financial stability. And secondly, in terms of other, potential for being used for, to sort of circumvent the AML, CFT sort of money laundering, etc. So they are huge risks. Remember, we just recently had to face all these de-risking sort of considerations. This is what, 7 years ago, 6 years ago? Most of sub-Saharan African countries were worried about being de-risked by the European, from the European system, etc. And then you add on top of this a solution that will, so-called solution that will lead to potentially transactions that are illicit. I think that's really risky. So I can only say that I still do not understand how a country now that has very low financial inclusion, has, let's say, even in terms of cell phone penetration, etc., all those are low, can sort of push this. There must be some other reason. And in this, I respect the authorities that made that decision. But from my perspective, I would like to see it, and have a conversation with the authorities or the monetary authorities in that part of the world. So that's what I would say about it. But on the other hand, it's clear now, having had this, let's say, 7 years of Bitcoin and experience of cryptocurrency, it's now clear that the issue of transactions is not as significant anymore. And these things are more of, let's say, wealth products. So people are the same way. Maybe we buy tulips or buy, speculate on land in New York or whatever else it is, or buy blocks in the Indian Ocean that we can probably prospect for oil or whatever. So if you think of it that way, then maybe there's a place for them, but it has to be correctly regulated. Regulation is key. So anything without regulation is a non-starter.
Thank you. Thank you, Patrick. I would like now to turn to some suggestions you may have for other central banks that are considering adopting CBDCs, whether they're in a condition where you don't have very vibrant private digital payment system, or more like the Kenya case. So if I could start with you, Kingsley, given your experience to date, what are the top, I say, 3 suggestions you have for countries that are considering going down the same route as Nigeria and adopting, beginning the process of introducing a digital currency?
So first, Patrick did mention this, and he said it several times, is, do you need it? I think in our own case, we started out with answering that question. It's very easy to look at what everybody is doing in the world and decide that you have to be counted amongst your mates and go for it. But it's important you actually develop this design paper that lays out the case, determines where you are as a country, both in terms of the manpower to do this, because once you introduce a CBDC, it's 24/7, it's non-stop monitoring. So you need to be sure that you have that. And it's not very cheap as well. You are hiring most of the technology that you need would have to come from outside your system, because technology is not something that central banks can boast that they are experts at. You also have to think about the payment system you have, whether a blockchain technology system can be superimposed on it, or that you're creating a brand new one. Either way, it will cost some money. So all of that have to be completely internalized, analyzed, and a decision will be made. I think the second thing you need to think about is you cannot overstate the importance of having a digital identity for consumers, because if you don't have that, then once you introduce a digital currency, you might now be in problem. You also have to look at the law itself, setting up the central bank and its issuance of currency. A lot of countries may need to change their law to be able to even issue a digital currency. In Nigeria, we didn't have to, because the Central Bank Act already covers, our powers to issue any form as long as the board approves and the president is notified and approves as well. And the last point I will make is because this is new, it will be very important that you take baby steps, steps that allows you to have a phased approach so that disruptions and difficulties can be managed in a sequential manner that doesn't disrupt the entire system.
Thank you, Kingsley. If I could just follow up on that. I mean, you've laid out very nicely what points other central banks need to think about. But, you specified and, highlighted the cost also, and that it entails quite a lot of work. So given all of this, is this something that you would still do? Or would you, for a central bank that hasn't started, would you advise them to wait while the technology evolves and there's learning from other experiences?
Well, I think at the moment, every central bank prints currency. And I think right here in Africa, to bring it home, I think only about 4 central banks in the entire continent have their own printing and minting. There might be more, but I know of South Africa, Nigeria, I think Morocco, and maybe Egypt. I'm not too sure. There might be more. But the point is everybody already spends money printing notes. So you have to think about whether investing in digital currency and whatever it will cost will actually be a saving to you. In our case, I think it is. It really depends on answering the questions that you can, fathom within your own country. And knowing what we know now, we would have done the same in Nigeria. We would have still gone ahead to introduce a digital currency. Thank you.
Patrick, if I could turn and ask the same question. I know in Kenya, of course, you're looking for, you're still in the process of thinking about this and doing, just finished the public consultations on this. But what are the kind of things you would advise other fellow central bankers planning to go down this route?
Thank you, Abe. I think first and foremost, and I'm sorry for repeating it again and again, clarity about why, meaning what problem are you resolving? And it has to be a fundamental economic problem. Is it financial inclusion? Is it costs? Is it other things? And it's true, as Kingsley said, printing paper currency costs the central bank something. That is clear. But the question is, it's not costless to maintain the system. And as you all know, the cost of IT in any system, even the IMF, where there's nothing else going on, is significant. And you have to stay with it. You have to be at the cutting edge at all times. So I think we have to accept that it is not just the cost of printing. There is actually a significant cost, and Kingsley talked about even the people, etc. So that is important. Clarity about why. Second is this thing of consider what are the other solutions that are available. We talk about CBDCs, and we could do a thought experiment. We in Kenya, we do have these private digital systems, platforms, and M-Pesa and others, and M-Pesa is not the only one, and they work fine in terms of financial inclusion. They work fine in terms of safety or security of transactions, and also actually almost instantaneous transactions, almost meaning within 5 seconds, this thing goes through. So it actually less than 5 seconds, the thing goes through. So the question here is, if you had a thought experiment, you want to do a CBDC in Kenya, and again, it's a thought experiment. We could change the law, change this, do whatever, and then, in a sense, let's say, nationalize those entities and bring them into the central bank. The question is, what would be the benefit to the ordinary Kenyan on the street for that transaction? All these things would then be CBDCs, but all the wallets would be here in the central bank, and it will really be exactly what any CBDC would be out there. But the question is, what are the benefits? I personally don't see the sort of direct benefit so clearly of such an operation, but we'll see what happens. So that is a clarity that we are talking about, and looking at the cost. However, a third thing is the population. You cannot leave the population behind. You cannot say, well, this is a decision of, let's say, monetary authority, and we have the mandate, we have the law. At the end of the day, the population may not buy the whole thing. This is, you can see what happened in El Salvador. And the population may not accept this for other reasons. So it is important to understand this. Finally, another issue which is extremely important is looking ahead, the innovations that will need to happen. It's not a one, there'll be other problems coming later on, or other things that need to be resolved. It means that you have to stay with it, and you don't want to be, in some sense, throttling innovations that will be coming along. As I keep talking about this sort of ecosystem, and it is important for the ecosystem to allow to flourish. So those are my key points in terms of considerations for CBDCs, or even for that matter, the private digital platforms that we have.
Thank you so much. It would be remiss of me, of course, to have two distinguished central bankers like this and not touch on one of the big challenges that we're seeing in the region, which is, of course, the surge in food and fuel prices in the wake of Russia's invasion of Ukraine and the pressure that it's put on inflation in our countries, the cost of living crisis that it's engendering. If I could ask you guys, please, to talk for no more than a minute about how you see this challenge and how you're addressing it. If I may start with you, Patrick. I know we're running out of time, but I have to ask. Patrick.
Okay, fine, thank you. So the issue is, you're absolutely right. We are having a lot of pressure from this, let's say, as collateral damage, and through particularly the price on fuel. And fuel has direct and indirect impact on most other things. So I think what we've done here is to subsidize part of that and hope that the G7s will sort out the matter with the Russian or whoever else is exporting the oil, and then bring down the price of that in the global market. Then there are other considerations, not just price, but there are also other commodities that actually are less available, fertilizer, not so much oil, wheat as well. And I think all those have to be dealt with, and government policy directed to that, of course, on a temporary basis. But this is significant. This is a time when fiscal policy has to be that much more directed to the specific problems like we did during COVID.
Thank you. Thank you so much, Patrick. Kingsley, Nigeria, of course, is an oil producer, but still being impacted by higher commodity prices, including because of, you have to import refined oil, etc. If you could say a little bit about how you're thinking about addressing the pressures that are rising from the latest global shock.
So it's good that Patrick mentioned the G7, because in truth, a lot of the problems we have now with food and fuel inflation is really political rather than economic. And we do hope that the world leaders will sort this out as quickly as possible, because ordinary people who have no egos and did not cause this problem are the ones that are suffering the most. Having said that, within Nigeria, what we're seeing is that farm gate food prices have either stabilized or reduced, whereas in the markets, it actually has increased. So what we're seeing is that a lot of the problems with rising food inflation is really due to logistic problems and, of course, the issue of higher prices of fuel and transportation. So we're trying to deal with that as much as we can. We're investing a bit in a commodity exchange so that they can stabilize prices. And then within the Monetary Policy Committee, we've raised rates, at least to signal that we will continue to keep an eye on inflation and stand ready to do whatever it takes to turn it around.
Kingsley, Patrick, thank you so much for joining us today in this fascinating discussion on where you are in your journey towards, in your journey towards the introduction of potential CBDCs in our region. Again, very grateful for your candid and really insightful interventions. Thank you again, and look forward to seeing you in person soon. And to the audience at the next seminar. Thank you so much. Thank you, gentlemen.
Thank you very much.